Hi everyone. So, have you received a phone call from your friend this week or last week, or a text message saying there's this loan going out there, £50,000. My friend just received a £40,000 loan from the bank, and you just don't understand what this loan is about? Yes, yesterday I'd had to advise about 5 business owners about what this loan is about. So in today's video, I'd like to talk about this loan, the tax consequence, so that even if you're getting this loan, you go into it with your eyes open. I hope you enjoy it. However, before we go on into this video, let me introduce myself. My name is Ola Sulaiman. I'm the tax girl. If you'd like to watch loads of more tax videos that will give you more enlightening about your tax situation in the UK, you should subscribe to my channel. And if you like this video, kindly like or share with your friends. Thank you. The loan I'll be talking about in this video is referred to as the Bounce Back Loan Scheme. It was a loan scheme that was introduced to support businesses that are going through hard times due to coronavirus. This loan is backed by the HMRC through the business bank, British Business Bank, 100%. The reason why they introduced this loan was because the coronavirus interaction bank business loan that was backed up 80%, the banks were reluctant to still giving loans out. So the Chancellor was nice enough to say, okay, give out the loan, we'll back it up. So just like any other loan, to be able to get this loan, you have some conditions to meet. The bounce back loan is meant to support businesses that are going through hard times. To be able to apply for this loan, you must be a business in UK that has been trading in the UK before the 1st of March 2020. You must have been adversely affected by coronavirus. You could actually take between 2,000 to 5,000. However, you're not allowed to take more than 25% of your turnover. So in this application, while doing this application, you'll be asked what is your turnover. And I've heard a lot of stories. I'm not going into that. And then you're supposed to apply for 25% of that amount. Now, this loan term is for 6 years. The first year is interest-free. However, after that is 2.5, which is quite low as well. It's a fantastic loan if you're planning to use it for the business. However, what I've seen is most people that have actually applied for this loan do not actually have any plan for it. It seems like a story of a toilet roll when coronavirus started. Now, if you've received this loan, what happens? Like I said, this loan is meant to help you in your business. So ideally, this money should be in the business, not out of the business. When I say in the business account, you can use it to pay for expenses for the business. Maybe this is the time for you to get a new website. You can use it to buy asset for the business. You can use it to pay for expenses such as the director's salary, such as wages, if that's what you want to do. You can still apply for the loan till November 2020. So what happens if you actually need to take out this money for personal use? It's possible, and I'm sure a lot of people have done this already. I can't even tell you so many stories I've heard since this started. Now, the company can decide to pay you the money as a salary. To do that, they would have to run the payroll, you'd have to pay national insurance and tax on the amount. However, if this is not the case, you've definitely collected a loan from your company, a cheap loan. And because you've received a cheap loan from your company, you'd have to declare this on your self-assessment return, the taxable benefit of this cheap loan. You would pay tax on it, and then the company itself will pay a Class 1A national insurance. That's the first one. The second one is the company has to show this amount that you've received from your company in the account that is done every year until this amount is cleared off. And also, this is the one that everybody have forgotten about, and this is the one that worries me a lot. If you're taking the money out of the company, there is a charge that you would have to pay if the loan that the company has given you is still outstanding 9 months and 1 day after the end of your accounting year. This loan charge is at 32.5%. This loan charge will be returned to the company when the director or the shareholder that's taken the loan has paid the money back. However, if the director does not pay the money back or the amount is waived off, then what would happen then is the director would have to declare it as a dividend for tax. Now, for you to be able to declare a dividend, the company must be running and all that. So for most people, I don't know, I shouldn't even guess, if the money is going to be on the account until further notice, you have to keep paying tax on that amount for the cheap loan. Your company would have to pay that hefty sum at some point. What am I trying to say? If you've received this loan, congratulations. Because what I've seen is most people that have received this loan don't actually need it. Use this money to advance your business. Use it to start a new business. Don't use it to transfer it quickly to the director's account. And if this is the case, repay it back on time because of all these loan charges I've talked about. I hope this video helps because at the end of the day, they usually tell us half of the story. And like I usually say, not knowing about a tax charge or a tax law or a tax benefit or a tax law, it's not an excuse. We all are bound by it, and if you get investigated, you can get into trouble. So that's my advice for today. Thank you very much. My name is Ola Sulaiman.